Brett Crow with Charles Schwab here, and the non-farm payroll came out this morning and didn't look real good. Now, unemployment stayed at 4.3%, matching expectations, but non-farm payroll came out at 22,000 jobs created last month, terribly missing expectations of 76,000 jobs. So how is the market taking that, and what can that mean in the future? Let's talk about that for just a minute. You can see market not liking that, right? It's spooking the market. We go into, this is a heat map looking at different areas, but if we go into the chart themselves, looking at the SPX, you can see it gapped open, looking, hot at the initial opening, but has since declined throughout the day. They haven't liked the news that has come with that, right? And so the question is, what is this meaning here? So let's look at something that might be of interest. So this is the TNX. This is the 10-year yields, is TNX.CGI. It's the interest rates on the 10-year Treasury. And so what we're seeing here is this was in a descending triangle formation. It broke through a support level and has dropped down. Now, what does that mean? It means that the rate that has to be paid on those Treasuries is decreasing. What does that mean? It means there's a higher demand for it, right? So if demand goes up, they don't have to pay as much in return for buying the Treasuries. If demand is low, they're going to have to raise rates to encourage people to come buy Treasuries. And so you can see back here a couple months ago, back in May, it was at 4.5%. Just got to move the decimal over there, by the way. 4.5%, and then down here it's about 4%. So you can see it's been dropping. Well, could that indicate that people are a little bit concerned about the overall market? Like with this news that came out this morning, possibly, right? Again, nothing is set in stone. Things can change. The market, other news can come out next week, but that's the sentiment for the moment, right? And if rates, let's just say there's some slowing in rates do decline, well, what areas could benefit or be injured by something like that? And it's interesting because we pull up something like right here. This is the energy sector. The energy sector did not like the news, right? And if we look at financials, financials is right here. Did not like the news, but not everything was down with that. You get something like communication services. It really wasn't impacted by that news. It's still holding up there okay on a day when everything was down or most things were down. And then you also have something like this, real estate. Now, could real estate potentially benefit if we are to see rates drop in the future? So something to think about. We don't have time to go into it all today, but James Boyd does a wonderful job. He just taught a class like 2 days ago going through the market, how it's impacted by rates, what areas could benefit from that, and how we can look at those items. And so take a look at that. I'll put a link in this class. It starts about the 11-minute mark is where it really gets into it. But watch the whole thing. It's great as he goes through discussing that. So check that out and see what you think about what could potentially come down the road. All right? Catch you later.